Good evening, ladies and gentlemen. The time is 3:52. Today is the 3rd of March, the weekly expiry. It was a fairly easy expiry given the premiums that were there for the expiry. And yeah, one big mess up I made. So I'll go over that mess up first, and then I'll get into what was the trade idea. How did that go? So around here, I decided to get a little fancy and short the 16,500 call option and 16,450 put option. It was trading for some 6-7 rupees, and the idea was I will have a stop loss on either. And yeah, so what ended up happening is this is my stop loss order. This was initially also 4.5. Into the up move, I had to quickly change it and try to place it with this being 13 rupees. So I'm placing a limit order to buy the call option for 13 rupees. And we get into where those orders executed. Yeah, so here you can see the order is starting to execute at 0.95 for the put option and 11.72 for the call. Then same covered at 12, covered at 12.5. And then next thing I know is that it's jumped to the 20s. So I had to go back to console coder, place market orders to cover at 21.22 and then also cover at 31.32. So that under 1 rupee call option over here is, you can see, right? So it's gone to like almost 50 paisa at some point, shoots up like this. And yeah, if you were caught on the wrong side of that, you would have given up a lot. So I gave up basically about 50% of this thing. So 50%, I was at around 9.3, 9.4, and then from there gave up about 33% of that. So anyway, that apart, the expiry was fairly easy to navigate. I also go over into what my logic for entry was. I got a very good entry here, and also I got the delta right on the entry, and that combined with a cool off in IV really benefited my position. So at the entry, I shorted the 16,900 call for around 26.27 and the 16,500 put for 21. So that gave me extremely good premiums. First of all, what is the entry thing? We're opening gap up. The global cues have been good. There's been a small cool off in S&P 500 VIX. So it should be more or less an inside expiry, like inside this particular range that is there. So best case scenario also 16,800, 16,500 is the range for the expiry. And I shorted, when you can see my call is much closer. When I entered, my call is just about 130 points away, whereas my put option is much further at 270 points away. It's a 400 point triangle, but much closer from the call side. So what ended up happening is that into this particular down move, just as we were testing yesterday's close, right, at that point of time, my position was already in a deep profit because this call gave up 20 points and this put has not gained anything, right? So cooling in IV, this put has not gained in anything. This call has given up all its value. At that point, I also moved, just as we were testing yesterday's low, I moved my call option down to 16,850. Okay, so far so good. And the first entire half is very easy to deal with. As we continue to head lower at this point, I risked off on my put. What I did was I squared off the 16,500 put because till then there was no spiking in it, but beyond that there would be. I started squaring it off around 26, 27 rupees, squared it all off, moved it all down to 16,450. As we continued to head higher, moved basically all of my put options to 16,400 and kept moving down my call option to 16,750, 16,700, and I was basically in very comfortable position, right, till about here. Here we had a breakdown, and what I ended up doing is at this point, at the worst possible point, I shorted the 16,650 call with a stop loss of 21.22, and exactly it doubled, hit my stop loss and went away from there. So see, so there that pullback was very sharp. It was a little difficult to deal with. So I'll go with this. See, I'm shorting the 16,650 put option. This is the covering part. Starting the 16,650 for about 15 change whatnot, and then end up covering it for 22. And this entire portion here, really, like this part was constantly about, okay, you take risk off on the put side, you head higher, you take risk off on the call side. Each time you're getting pushed out of your position. This is quite sharp. And yeah, so then just about here I decided, okay, let me take risk off on the position and just like sit very far with about 8 to 10 points and try to trail that till the end. That worked out extremely fine till here, till I got a little adventurous and decided, okay, let me short, because my idea really was, like, if you see, I'm looking at the 16,450 call option. Now you look at the 16,450 call option. At the beginning of averaging, it's trading at about the beginning of averaging around 3 o'clock. Yeah, it's trading at about 50 rupees, right? That's from where I'm tracking. It has gone down as low as 12 rupees. Now, if it's gone as low as 12 rupees, you can basically assume one strike above this is going to end worthless, which so you would think that, okay, 16,500 should be more or less worthless at that point of time, but instead it's massive up move. I guess, yeah, this is one of the risks that you have when you take such trades. They have very high probability of working out, and like you should take stop losses when they don't. I couldn't take a stop loss in time. That's on me. So these are the risks of doing business. So apart from that, still a green day. Nothing to complain about. As of today, something that is there and something to celebrate, because you'd always find things to celebrate, is the realized P&L on my account since I started this in April of last year. For this financial year will be crossing 2 crores. So that is something to celebrate. And apart from that, of course, in this process, everyone has got paid. Zerodha has got paid, exchanges got paid, government has got paid. So yeah. Anyway, thank you so much for watching, and I hope you had a good expiry. Markets continue to be a little bit all over the place, so for now, stay safe. And even now, I would not think it's okay to carry any overnight trades. So keeping it intraday, it's been a good first 2 days of March, and that doesn't mean that I will keep trying to see. Market gives you opportunity. These kind of premiums are there. That's why you're able to generate X amount of profits. You're not forcing it out of the market. And also there is a proportionate risk, so always be aware of that. And I will catch you at the next one. Take care. Bye bye.